An Individual Retirement Account/IRA Guide. Chapter 1. Individual Retirement Accounts/IRAs. Traditional Individual Retirement Accounts/IRAs. IRAs, Individual Retirement Accounts, are tax-deferred retirement plans that an individual sets up on their own as opposed to a 401(k), which is set up with the employer. With a traditional IRA, you get a current tax deduction in the year you put money in your IRA, however, it's all taxed when you spend it at retirement. If you're 50 and above, you can make annual catch-up contributions of an additional $1,000 above the usual limit. If there is no retirement plan where you work, you can open an IRA, Individual Retirement Account, which is money either taken directly out of your paycheck, a deductible IRA, or a non-deductible IRA, which is an account you start yourself at a bank, credit union, brokerage, or mutual fund. They give you special IRA forms and you fill them out. It's that simple. You were allowed to put up to $5,000 in it per year when I wrote this, $10,000 for a couple and an extra $1,000 if you are over 50, but this changes all the time. You only pay tax on this money as income when you retire. The only people who can have IRAs are workers without other pension plans, married couples with less than $50,000 annual income even if they do have a pension fund at work, single people who earn less than $35,000. If using an IRA, you have to file IRS Form 8606 with your tax return. If you decide to switch your IRA from one institution to another at some point in time, perhaps like switching from a bank to a mutual fund company, note that there's a stiff 20% penalty if you touch any of the money in your IRA on any transfer by using it for personal purposes other than keeping it in the IRA. Beyond that, the usual 10% penalty for withdrawal before the age of 59.5 applies. While your contributions get no special tax treatment, any money you earn on interest and later withdraw is never taxed. You pay the taxes up front. You can withdraw the money anytime. Basically, the rules are: annual contributions are not tax deductible. Beginning at 59.5, you can withdraw money without paying federal income tax. You can withdraw your annual contribution anytime without incurring a tax. Can continue to contribute money into until 70.5. Don't have to withdraw money from it if you don't want to at 70.5. You can die and leave the money in it. If you are a first-time home buyer, you can withdraw $10,000 for the down payment tax-free and without penalty. You can withdraw the money if you become permanently disabled. As far as I know, you can't take loans out on IRAs, but you can liquidate them for an early withdrawal penalty. To sell your account, file a form with the company the account is with. There are some exemptions that you could qualify for that would exempt you from the 10% early withdrawal penalty before the age of 59.5. Some of these companies might offer you a loan with the IRA as collateral instead of cashing it in. Some of the exemptions that could get you out of paying the 10% early withdrawal penalty are as follows. You roll the money over to another IRA or qualified retirement plan. The owner dies and leaves the money to a beneficiary or estate. If you acquire a serious disability, you can withdraw your money early. First-time home purchase. Return to college, the qualified higher education expense option. While unemployed, you can withdraw money to pay medical insurance premiums. You can take money out for medical expenses that exceed 7.5% of your adjusted gross income. Ask any fund company or brokerage about their IRA accounts. Roll over a 401(k) into an IRA. People roll over their 401(k)s into a traditional IRA when they quit or lose a job or right after they retire, at least 59.5 years old, to avoid early withdrawal penalty, within 60 days for two reasons. They don't have to pay income tax on the entire withdrawal of the 401(k). You can invest the money any way you want. Roth IRA info. An IRA is for people who don't have a retirement plan at work. A Roth IRA is for people who do. Your 401(k) at work defers the income tax until you retire and take the money out. Your Roth IRA is money that you already paid the income tax on. The advantage is that it makes tax-free interest gains year by year, then you're not taxed on it again when you retire. There's no penalty for early withdrawal. You're eligible to contribute to a Roth IRA even if you're in a retirement savings plan at work. A Roth IRA does not allow tax-deductible contributions, but earnings and qualified withdrawals are tax-free. Unlike IRAs, there are no minimum distribution requirements after age 70 and a half. You can invest up to $2,000 per year, $4,000 for married couples, into a Roth IRA, which you can then use to buy stocks or bonds. To qualify, as a single, your adjusted gross income must not exceed $110,000. As a couple, it must not exceed $150,000. You can also have a pension plan at work and still open a Roth IRA. While your contributions get no special tax treatment, any money you earn on interest and later withdraw is never taxed. You pay the taxes up front. You can withdraw the money anytime. If you convert a regular IRA into a Roth IRA, you don't have to pay the 10% withdrawal penalty, but you will have to pay income taxes on the amount involved. The biggest difference between Roth IRAs and regular ones is that Roths are not tax deductible on your income taxes, but interest on the investments is not taxed. Distributions of Roths older than 5 years after the age of 59 and a half are completely tax-free, hence, the big advantage is on any capital gains in investments held in a Roth, whereas capital gains are taxable in conventional IRAs when you take the money out after 59 and a half. The Roth IRA is generally used for retirement savings, but parents and grandparents can use it to fund their children's future college education. The Roth IRA will not reduce your child's chances of getting financial aid. rothira.com. rothira911.com. rothira-advisor.com. rothiraexplained.com. rothirainc.com. IRA conversion into a Roth IRA. It's easy to convert an IRA with an employer into a Roth IRA. You can convert 401(k)s into Roth IRAs too. Choose the financial institution you want to open a Roth IRA at, like a discount brokerage or no-load fund company. Go to them with your paperwork and tell them you want to open a Roth IRA account. Tell them the exact investment instruments you want to invest in. Complete a rollover application form. The money is transferred and you pick what stocks, funds, etc. you want to invest in. When you convert money into a Roth IRA, you owe income tax on that money since it's tax-deferred money. You owe the taxes when you remove it. The money in your traditional IRA or 401(k) is tax-deferred. You owe income taxes on it the year that you do the conversion. If there is a lot of money in it and you have a good salary, it might cost you a lot in income tax. Once it's in the Roth IRA, it's money that you have already paid income tax on, so that in retirement, that's all your money, no more income tax to pay on it. There are also recharacterization, which is to move money that was converted into a Roth IRA back into a traditional IRS. Reconversion is to move money back into a Roth IRA after recharacterization. accsite.com/calcs/rothtransfer.html. bankrate.com/brm/green/retirement/convert_401k_roth_ira.asp. calctools.com/rothconversion.htm. IRAs for kids. Some mutual fund companies allow children to open Roth IRAs where they can contribute earned income from a part-time or summer job to it. There is an education IRA with identical rules as the Roth to qualify, where you can contribute $500 per year for your children's future college education. There is no tax at all on it. Some companies are: American Express, its new dimensions. 800-328-8300. AmericanExpress.com, AEXP.com. Invesco.com. 800-525-8085. JanusFunds.com. 800-525-8085. Neuberger Berman. 800-877-9700. NBFunds.com. PBHGFunds.com. 800 433-0051. tiroprice.com. 800-638-5660. strongfunds.com. 800-368-1030. Steinrow Young Investor. 800-338-2550. steinrow.com. USAA First Start. 800-382-8722. 800-531-8722. USAA.com. Vanguard.com. 800-635-1511. Warburg Pincus. 800-888-6878. Warburg.com. The Real Estate IRA. You can buy real estate with your IRA money, which means you can buy real estate as part of your tax-deferred retirement plan. You must wait until you reach age 591/2 to access the money in your IRA, except if we buy investment real estate that we plan to make money from by either rental income or reselling it. You're not allowed to use it for yourself or a family member. The property can be located anywhere in the world. The rental income you earn is tax-deferred or tax-free. The Internal Revenue Code approves most types of real estate for IRA ownership. Apartment buildings, condos, co-ops, improved land, multifamily homes, office buildings, raw land, single-family homes, townhouses. The deal is that you need a custodian, which is a bank that administers real estate IRAs. You find a property, go to a bank that sets up real estate IRAs, and they set it up. Your IRA owns it. When you sell it, the money is paid to the IRA. If you decide to use the property after age 59.5, it becomes an IRA distribution like money from an IRA. The home title goes in your name, and now you pay taxes on that money, which is its appraised value. Your custodian pays all your expenses from your IRA. The rent payments of the tenants are made out to your IRA, in care of your custodian. The real estate IRA costs a few $100s to set up, and there is an annual administration fee, which could be a fixed fee or a percentage of the appraised value of the real estate. You cannot engage in self-dealing, borrow money from your IRA for yourself or a friend. With the Roth Real Estate IRA, you don't pay taxes. You can act as a property manager on your real estate IRA and be paid a fee by the real estate IRA. You will fill out a W-99 form for these fees. Any income the property generates must be returned to the IRA. Expenses are taken out of the IRA. Get IRS Publication 590, Individual Retirement Accounts. Self-Directed IRA Account Info. Under a self-directed IRA, you can use your IRA money to buy, sell, or invest in anything you want, like gold, real estate, stocks, mutual funds, bonds, art, collectibles, and virtually anything you deem is profitable. Self-directed IRA accounts can be held in a variety of assets, including traditional investments of stocks, bonds, and mutual funds, as well as other IRS-permitted investments like real estate, both domestic and foreign, private equity, tax liens, and franchises. The first step is to convert your traditional IRA or your Roth IRA into a self-directed IRA through a self-directed IRA administrator. You fill out a one-page application and send in a small fee with it. Your funds are transferred from your current IRA to a new self-directed IRA. With that account, you will be able to invest your retirement savings money in real estate, gold, etc. Buy something and pay for it with the money in the self-directed IRA. Get the paperwork together through your lawyer and send it to your IRA administrator. They will approve the transaction. The property will be purchased in the name of your IRA. All income from the property and from the sale of it goes into your individual retirement account. 401k-and-IRA-RETIREMENT.com. IRALLCpartner.com. guidantfinancial.com/products/self-directed-IRA. hubpages.com/hub/self-directed-IRAs. selfdirectedira.org. selfdirectediraaccounts.com. navep.com, National Association of Financial and Estate Planning. Self-directed-IRA.com. Self-directed-IRA-store.com. self-directed.info. Spousal IRAs. A non-working spouse, if the couple earns less than $150,000 per year, is allowed to start an IRA and put $2,000 tax-free dollars into it per year. The Stretch IRA/multi-generational IRA. Stretch means you stretch your IRA to help your grandkids. Stretch IRAs are ordinary IRA, either traditional or Roth, accounts that you can set up to defer taxes over your lifetime. Then your beneficiaries get it and they can defer the taxes too. When you start an IRA, get a beneficiary form and name a beneficiary. This way when you die, the money goes to them and the tax on it is dispersed over their entire lifetime. If they're smart, when they take money out as taxable income, it will be in years where they are not earning much so they can work it so that they will never pay taxes on it. annuitybrokerage-services.com/stretchira.htm. dinkytown.net/java/stretchira.html. stretchira.com. stretch-ira.com, stretchira.com. IRA Trustees. firsttrust.com, 800-525-2124. lincolntrust.com, 800-825-2501, Denver. sterling-trust.com, 800-955-3434, Waco, TX. American Church Trust Company. 14615 Benfer Road, Houston, Texas 77069. 800-228-8825. churchtrust.com. CNA Trust Corporation 3080 South Bristol St. 2nd floor. Costa Mesa, California 92626. 800-274-8798. cnatrust.com. Pensco Trust Company 250 Montgomery St. 3rd floor. San Francisco, California 94104. 800-969-4472. pnsco.com. Traditional IRA websites. Get IRS publication number 590. en.wikipedia.org/wiki/retirement_savings_account. en.wikipedia.org/wiki/self-directed_IRA. 401kafe.com. aarp.org/re/financial/IRA. ira.com/products.htmirs.gov/ep. iraexpert.net, Advanced IRA Distribution Training for Financial Advisors. irafund.info. irahelp.com, 800-663-1340. irajunction.com. iraplans.info. irs.gov/formpubs, 800-829-3676, publication 590. pensionplanners.com. Internal Revenue Service. 1111 Constitution Avenue, NW. Washington, D.C. 20224. 202-566-5000. 800-829-3676. 800 Tax Form. irs.gov. Get the IRS booklet, number 590, Individual Retirement Accounts. Invesco IRA Guide. 800-221-8772. Invesco.com. Strong Fund IRA Kit. 800-368-5780. strongfunds.com. Vanguard Investments IRA Kit. 800-831-1009. Vanguard.com.